Smart Money Tuesday, guys. This was a lot of information, and I wanted to be fully transparent with you. As you saw an example with Bitcoin, I don't always make the right decisions, but I think I'm going to start making some new decisions when it comes to Bitcoin based on the information I discovered for myself. And so, you know what? That's what we're here for, is to grow and learn. That's all we're here to do, grow and learn. Hi, everyone. Welcome to my channel, Budget for Success. Woo! My name is Onyx, and you know what time it is. It's my favorite time of the week. It's Smart Money Tuesday. Woo, woo, Smart Money Tuesday. I love Smart Money Tuesday because this is my time where I get to share with you little nuggets, things that I have learned over the years. Listen, I've been in the area of finances. I've been a finance director. I started out as an accountant. I worked my way up. I've worked for corporate companies. I've worked for government agencies, cities. I have had a span of experience in the area of financial budgeting, financial statements, and investing. And I just want to share nuggets free of charge to my YouTube community so that you can learn and get excited about building wealth. So today's topic is an exciting topic for me because it's about how to make your money make money. That's right. That is right. How can you make your money make money? So our topic is going to be dollar cost averaging. Yes, we're going to talk about the benefits of dollar cost averaging and why this is a smart investment strategy and why it's effective for wealth building. Now, this presentation is for illustration purposes only. I'm going to be sharing some personal examples. I am not a financial advisor. You need to connect with a financial advisor so you can get started on building your wealth. But let me provide to you some education, some information, so that when you connect with your financial advisor, they realize that you're not from around the way. Like you really know what's going on. Like you got a full understanding of what you want to do with your money. Okay? This is education for education. All right. So we're going to talk about understanding dollar cost averaging. We're going to talk about advantages of dollar cost averaging. I'm going to give you a real life comparison of dollar cost averaging versus a lump sum investing. Yes, I'm going to give you an example and then give you some practical applications, things that you can do to get started with dollar cost averaging, and then we're going to have a conclusion. All right, so let's understand what is dollar cost averaging. What are you talking about, Onyx? So I'm going to refer to it as DCA, okay? Because dollar cost averaging is a mouthful. So DCA. What this means is that you're going to invest, ooh, go back, previous. My bad. Sorry, guys. Okay. So what is dollar cost averaging? So this involves investing a fixed amount of money on a regular basis, regardless of the market conditions, which really, when you do dollar cost averaging, it really reduces the impact of volatility because if you're purchasing shares when the stocks are high and when the stocks are low, you kind of average it out for what you pay. Versus if you do a lump sum and you may invest what you think is a low price, and then you find out the stock market dropped, and now what you paid is higher than what the market is, right? But if you invest over a time period, you'll reduce the impact of the volatility of just taking some lump sum amount. Like I'm going to take 10 grand and put it in and see what it does. Well, whatever price you paid, that's the price you paid. Now, if you took that 10 grand and you spread it out and you invested, say, $500 a month, then the price you paid is going to be all over the board. But the average is what is going to be like your cost, right? Is the average of those highs and those lows. So there's some advantages for that. The idea is this: invest a set amount of money every month, make it a part of your budget, set it and forget it. And then you're going to be purchasing stocks at variable rates, depending on what the market is at the time you buy the stocks. This also works with retirement plans. If you haven't set up your retirement plan with your company, your organization, and they offer it, please let's look into this, guys, because what it is you'll tell your company, I want you to invest $200 out of my paycheck. You get to do this if you put it into retirement account. There are certain tax advantages, right? So even though you may say take $200 out, it may be a little bit less that actually comes out of your check because of the tax advantage. So you want to take advantage of the tax advantage. So again, just to repeat, because I like repeating information so it sinks in, but I'll say it in a different way. Dollar cost averaging, or DCA, is an investment strategy that aims to reduce the impact of volatility by investing in fixed amounts over a regular period. Whether you want to do a fixed amount every week, every month, every 6 months, it's up to you. You could do it every time you get paid. If you get paid on a biweekly basis, then you're going to be investing 26 times a year. So just make sure that it's on a regular basis. Historically, this type of investment has been extremely popular among investors. I mean, we're talking about over decades because it really helps you navigate the market conditions more efficiently. Now, why is it so effective and resilient? Well, historical data supports this, right? So they have done studies, analysis of take any stock, it could be Amazon, whatever, and look at if you had invested a set amount of money every month over the last so many years, how much money would you have versus if you took that $10,000 that you maybe equivalent that you invested over, 5 years, but you took $10,000 and invested it in day one, you're going to have more money. You're going to have more money, all right? But the key is to get started. Let's get it started. And yeah. So advantages. What are some advantages of doing DCA? Well, as I mentioned to you several times, it reduces the impact of the market volatility. You're going to invest a regular fixed amount of money every month, regardless of the market conditions. And even in 2020, when the stock market crashed and everybody freaked out, I, in fact, flooded the market with money. I was like, oh, let's get involved. Let's get involved. So, regardless of the market conditions, you're just going to keep putting that money away. It really helps you avoid the stress because people try to time the market. They go, oh, the market is good. And then they get in. Okay, that's the wrong time to get in the market. When the market is good, you're paying premium prices for stocks. And so then how do you know when is a good time to get in? I don't know. When it drops, okay. 2020 was a good indicator, right? Because the stock market crashed and I knew it was going to rebound. So I was like, get in, get in, get in. But I mean, you don't want to wait for some huge, devastating tragedy to occur to get excited about investing. And so instead of trying to time the market, which really never works for anyone unless you have a crystal ball, it doesn't work, right? Then just set up a regular plan and take your emotions out of it. It's systematic. You're just investing. There's no impulsive decisions like, oh, that stock's going good. I'm going to invest in Tesla right now because I think Tesla is going to jump up, and Tesla doesn't jump up, it goes down. That's emotional and it's stressful. Instead, come up with some solid stocks from work with your financial advisor, or if you are investing in your retirement account, Most cities have a retirement plan, and there is someone assigned to that plan to help you navigate the plan. Find out who that person is and connect with them and ask for guidance on making investment decisions. Once you have a solid investment plan, just stick to it, okay? Just stick to it. Now, I want to give you a real life comparison. Okay. Okay. So there's two scenarios, right? The one investment I did was where I invested a certain amount of money over a period of time, dollar cost averaging, and I'm going to show you how I made money. Then there's another stock that I invested a one-time investment in, didn't do anything else. I made a lot of money on it, but I want to show you what I could have made on it had I took that lump sum investment, put it in, but then decided to just add $100 a month to it. That's it, just $100 a month. I'm going to show you how much money I could have made. Okay, so let's get started. Here's the first example. This is over a 12-month period. Okay, now listen, this is money that's going to be invested every month. This is not my food money. This is not my mortgage, my rent. I mean, nothing. This is just money that I would have likely just spent. Okay, so it's $100 a month that I could have, I don't know what I would have spent it on. Who knows? But this time I invested in, I just told Robinhood, transfer $100 into this stock every month. And so here is month one. I put $100 in. The stock price was $135 a share. So I didn't even get a full share. I got 0.74 of a share. So my investment value was $100. That's day one. All right, month two comes along. I put another $100 in. So I have $200 in, but look at the stock price. It was 135. Now it went down to $129. So I took a loss, but I am not emotional about this because I have set up a plan. I'm going to invest every month. And my assumption is eventually the stock is going to go up. And so here is my now new investment value. I invested $200, but my investment value is only $195. So I actually took a loss of $4.44. Now, I said to you, this was my coffee money. So am I willing to absorb that kind of loss for hopes of returns in the future? Yes, I am. I am very excited about it. Now, that's number one. Number two, I can say to myself, however, Onyx, your investment now is worth $200. If the stock price ever drops or dips below, let's say I'm willing to lose half of the money. So if it ever gets so low where I'm losing money, I can put a stop loss in and say, sell, 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 sell. If the stocks ever get below this price, sell. I'll just take the loss and move on and invest that money elsewhere. But I won't lose everything, right? It will not drop and bottom out. Now, if the stock all of a sudden just dropped because of something like COVID and I feel like it's going to go back up, once it sells, I can take that money and reinvest it. But I put this stop loss order in because I don't want to be out playing tennis when the stock market is crashing and I lose all my money. So I want to be out playing tennis and the systems say, uh-oh, prices are going down, they're dropping, they hit this spot, let's sell, 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 so that she can make some money on this. Well, not make money, but so I don't lose money. So the month three comes along and look at that. Even though the price per share is down, the good thing about this is I now was able to purchase 0.8 tenths of shares versus zero point 0.7. So look at me. Look at me now. So now my investment value is $289, still a loss of $10. But what happens, man, when that price of the stock goes up? So month four, it's up higher than it was from month one. And this is a real stock, by the way. Look at there. It was $143. So when I purchased $100, yes, I purchased less shares, But woo, look at my investment value, $431. So I actually made a profit of $31.18. So run this through the 12-month period. I would have invested $1,200, but my portfolio would be now worth $1,401.56. So a total gain of $201.56. Let me give you an example of a stock I wasn't quite really sure of. Everybody's been on the bandwagon with cryptocurrency and Bitcoin. And I wasn't real clear and sure about what was going on. All right, so here's my Robinhood account. This is the amount of money that I have invested with Robinhood, and this is what it's done today, right? This is the volatility for the day. This is the volatility for the week. But let's do 1 year just so you could see over time. So my investment back in February of 2024 was $360. And now, when you get over here in February 2025, it's $2,949. Now, I only use Robinhood for crypto. I used to use it for all of my other investments, but now that I have a financial advisor, they manage those funds. And so, my financial advisor really doesn't do crypto. And so I just kept my cryptocurrency. But wow, you go, woo, girl, that's a win. That's a win. That's a 717% increase. You go, girl. Yes. Now, the only thing with this crypto is I just put the money in once and that was it. I didn't add any more money to it. What I was doing. Okay, so this is Bitcoin. All right, so I want to show you history. Here it is. I bought the Bitcoin in August 5th, 2022 for $499.99. Wow. Why did I do 499.99? I don't know. I probably that's all I had in the account to invest. I don't know, but I did. And so at that time, Bitcoin was $23,241.98 a share. So that's what I purchased it at. However, now you look at my equity in Bitcoin and I have 2000, that 500 or 499.99 is now worth $2,068, and it changes all the time because crypto prices go up and down even over the weekends. So what was my average cost? Well, it was $23,242 a share because I just did this one time investment. Bloop, I just lumped some money in. And it worked out? Yes, because look at my total return, 313%. I made $1,500. Woo, that's amazing. But what if I had used my own advice? So this is a website that I use called Coin Codex. It will let you run scenarios. I like it. It's fun. So here's Bitcoin. That's the investment. My initial investment was 499.99. But say I'm going to do a recurring investment of $100 monthly. And remember, what I like about this website is you can go back in time. So it was August of 2022 that I made the investment. Now, it's not going to calculate the exact day on August 5th when I made the investment, but let's just run the scenario out, okay? It's going to get us close. And today, February 2025, what would I have made if I had just simply put $100 a month into Bitcoin? Let's scroll down here. You invest $499.99, and then this is how many units you would have bought at that time of the investment. But then there was 32 recurring investments of $100, so that would be $3,200 over the years. So my total investment in, which is the $3,200 plus the 49.99.99 is $3,699.99. And I would have bought at the end of that time period 0.11 shares. So what would my portfolio value have been if I just simply put in 3,000, well, basically $3,700. If I invested $3,700, I would have had a gain of $10,927, which would have been a return of 2,185.43%. And so this is the gain that I would have had. So this is a graph to show that this is the value, right, of this investment over time. These are historical numbers that they're looking at from the time period we entered up till now. So here are our results, right? So this is putting in $100 a month. This is the price. The key thing here is the price back then of $23,000 a share versus now $96,000 a share. That's key. Yes, you can see the red. There were losses over time, but remember, losses are good because that means you can purchase more shares with that same amount invested. And then this is just adding up the money that you invest over time. You had your $499 plus your $100. Now you're at $599, $699, $799, $899. So this is your actual investment going up. So here at the end of today, right, you would have had $3,700 in, but the portfolio value, or I would have put $3,700 in, and I would have had a portfolio value of $11,427. And then this little website tells you about dollar cost averaging, obviously how it works and what the benefits are, etc. So I wanted to share that example with you because we don't always get it all right, right? But it did make me take a look at my cryptocurrency and start deciding whether I want to start putting money in it every month and just put a stop loss in and go, hey, Onyx, first of all, you got $1,500 right to work with because I've made $1,500 on my $500 investment. And so it's just like so easy, right? I could go, okay, if ever the portfolio value gets down to, half of what I've already made, then sell. Okay, well, I still would have a profit, right? So what is the harm in investing in it now to see where it goes moving forward? It's really a decision choice. But the thing that I really want to stress to you is that you need to start somewhere. How do you want to do this? First, you need to decide how much you want to invest regularly. I know for Robinhood, I think at least $25. I mean, you may be able to invest less. I don't know. But I know $25 you can put in a month into Robinhood, no questions asked. Robinhood will allow you to set up the investment plan, $25 a month. They will pull the money out of your account every month and invest it for you. Or you can transfer a lump sum into Robinhood. It will earn interest while it's sitting there, but you can also just invest that lump sum every month so that you get the advantage of the DCA, the dollar cost averaging. Okay. But the fact is, you want to decide how much you want to invest a month. I just gave you an example of what Bitcoin would have done just investing $100 a month. So come on, figure it out. Set up your frequency. Do you want to do it weekly, monthly, or quarterly? Well, with crypto, the market is always moving. So setting it weekly, right? So if you had, say you have the ability to save $100 a month, you could do $25 a week. That way you take advantage of the different rates at the time of investment. But it's very crucial to you set up a regular investment plan if you really want to take advantage of DCA. Now, what should you invest in? Well, that is something that you're going to have to do some research on, or you're going to have to talk to a financial advisor. You're going to have to get with, people that are very knowledgeable to help you. But you can invest in stocks, ETFs, mutual funds, whatever aligns with your goals, really. It is your decision. But the thing is just to get started, okay? Get started. All right, there are lots of tools and platforms out there to help you. I just showed you my Robinhood account. Robinhood is amazing. I think I'll do a video where I'll walk through Robinhood just so you can see how it works. I also have a code that you can use so that you can sign up for Robinhood. If you use my code, you get some free shares of stock and I get some free shares of stock. And so let's do that. Let's do that. set up your Robinhood account and let's get going. But these platforms let you set up this regularly scheduled investment plan. There's tutorials out there. You just get out there and just get started. Or if you're dealing with your job, you just tell your job, they set it up with payroll, and that money comes out of your check before you even see it. It's also nice that even if you're a beginner investor, you go out to the Robinhood account, they'll give you some explanations about the stock you're researching. They will give you some information of that company in the news. There'll be various links that you can use to research what's going on in the news with that company. And so there's lots of platforms that give you lots of information. Heck, just get out on the internet and look. Do your due diligence. But the biggest thing and the way that DCA works and the way that it is really a plus is that you have the discipline where you make regular contributions regardless of the market fluctuations. When I showed you, what would have happened with the Bitcoin had I invested $100 a month, you saw that there were a lot of months where I would have taken a loss and been like, oh, I lost money. Take emotion out of it and just leave the plan, set it and forget it. That's my theory. So, in conclusion, DCA really does help minimize the impact of market fluctuations because it spreads your investment out over time. It helps you to create a discipline so that you are really in a mindset of saving and investing money without thinking about it, regardless of the market conditions, and you're not taking the money out, you're just setting it and forgetting it. You're leaving it in. If it's a retirement account, you really shouldn't or can't touch it because that money is for your retirement. And with your job, some companies, they won't even let you pull the money out, right? Until you leave the company. So it's really about discipline. That example I showed you with Bitcoin, I would have only made the 10 grand if I had put the money in and left it in, right? And didn't go, oh, it's doing so well. Let me sell it. Let me go buy this or go buy that. That 10,000 would have only materialized if I had put the money in, I set it and forget it. There's so many areas and places where you can get your DCA set up. There's no limits, right? It's just you doing the work to get it started. Now, if you want assistance and help with, I just need help with budgeting. How do I even find the $100 a month to invest? Or Onyx, you know what? I got this, but I don't think I'm doing it at the best of my ability. I think I could do more. Whatever the case is, I want to help you win and succeed and become wealthy. So you can reach out to me. There is my email address, ojones2012 at icloud.com, and send me an email and let's get started on some coaching, okay? Because I'm here to help you win. That is my goal. All right, Smart. Thank you so much for hanging out with me. Hey, don't forget, I do have a giveaway going on. I'm giving away money. Yes, money, money, money. I have two savings challenge books. One will help you save 12 grand. The other one is a Fred Flintstone savings binder. If you're a winner, you're going to get the binder plus some cash to help you get started on savings, plus a few other savings challenges. And so there's going to be more than one winner. You definitely want to go find the video where I have giveaway in the description and listen to it and do what it says to do and read the guidelines for the giveaway, but get involved with the giveaway. All right, I appreciate you and I want you to have a prosperous week. And if you like this video and you want more Smart Money Tuesday, whoop, whoop, make sure you like, comment, and subscribe to Budget for Success. Bye for now.